Hi friends, this is CA Vardhaman Rakhecha and I welcome you all to your own ATS channel. So today's video will be on one of the most buzzing stock, your favorite stock, that is the bank on which the retailers are heavily banking on, the Yes Bank. The bank on which the retailers have been substantially increasing their holding year on year and the share price of which has been substantially decreasing year on year. The stock with which people have mixed emotions. For most, it has been a big disappointment as the share price have tumbled from mammoth 400 levels to presently 12 to 14 rupees, whereas for most it has been nerve testing moment as they have been waiting patiently in anticipation that the stock will reach to its golden days. So will the investors be able to relive its golden time, and will the Yes Bank share hit back double century or 400? For that, be glued to the video for another few minutes. Let us compare 2018 Yes Bank with 2022 Yes Bank. Before I explain you, let me explain you one important concept, the concept of market capitalization. Market capitalization is derived by total number of shares multiplied by the share price of the share. Means it will derive the total value of the business. Means if today you want to buy the business, how much will you pay in total? The number of shares outstanding of Yes Bank when its share price skyrocketed to 385 was 230 crores. But today, the number of shares outstanding is 2505 crores approximately, with no corresponding increase in profit. Means number of shares has increased almost 10.9 folds, but the profit, the earning per share has not at all increased. Back in 2018, when the stock price of Yes Bank was 385, its market capitalization was number of shares outstanding that time was 230 crore, multiply by 385, that was its share price, we get around 88,500 crores approximately. And today, if we multiply the number of shares outstanding, which is 2505 crore approximately, with the present market price, it is hovering around 14 rupees, we get a market capitalization of 35,000 crore. That means if we multiply 35,000 crore by 2.53 times, it is as equal, it is as good as it has reached the market capitalization of 88,500 crore. 35,000 crore into 2.53 times, we get 88,500 crore. That means if I multiply present share value 14 rupees with 2.53 times, we get 88,500 crores. Means at 35 rupees, if I multiply with the number of shares, that is 2,505 crore, we get market capitalization of 88,500 crore approximately. So it means the share price of, if it reaches the share price of 35 rupees, it is as good as it has reached the historic share price of 385. The price of the stock is followed by its performance in the long run, unless there's operators play. So if we compare 2018 versus 2022, we see that in 2018 interest income was almost same what we have now in 2022, but due to rising in operating costs, the EBT and the PAT which we have got now in 2022 are lower than 2018. Also, EPS back in its golden times was just fantastic, but today its EPS is also negligible. Net interest margin is the spread between the interest it collects and the interest it charges. So in 2018 it was higher, so it was better. And similarly, non-performing assets, if you see in 2018 was much in control. Non-performing assets means how much of your debtors or to the people whom you have lent money have become bad. So in 2018 it was hovering between 1%, and today the GPA is around 14% and NPA is hovering between 5%. PCR, provision coverage ratio, is the ratio which indicates that how much provision, how much money you have kept aside for the loans that are doubtful to collect. So in 2018 it was just 50%, and today it is bet higher. So today it is better. In 2018 it was just 50%, which clearly indicates that if a person would have studied or I would have gone in depth in the financial analysis of the bank, he would have trimmed the stake. So it's better that always you study or analyze like how Warren Buffett does, reading 10 hours, or you better always consult an advisor so that you can take exits from the stock at correct time. Similarly, its CASA ratio was better in 2018 when compared to presently. So although things seem to be pretty weak when compared to 2018, but the things are improving, things are stabilizing when compared to 2020 performances of the stock. So let us check how the stock performance has been improving since 2020. Back in 2020, it was in humongous loss, and that's the reason its PAT and its EPS were negligible. Similarly, its net interest margin has improved now, and also gross non-performing assets was as high as 17%, although it has deteriorated, but still lot to improve. So GNPA, NPA is also improving now, and even the provision coverage ratio is higher when compared to 2020. Even the CASA ratio is better than 2020. So to conclude, Yes Bank was a very superior bank back in 2018, and that's why market was giving crazy valuation, and that's why it was part of Nifty 50. But now, although things are improving since 2020, as it has been giving some decent results since few quarters, but there has to be consistency. Some more years it has to be giving continuously tremendous good results if it wants to come back to its golden days, near to its golden days. But thinking that it will reach back to its peak of 385 levels is a far-fetched dreams. So we have tried to keep our video short. So in case if you need in-depth analysis and the target price more importantly, you can check our research report which is given below. And if you liked our video, then do like, share and subscribe to your channel, ATS channel. Thank you.